Welcome to the Same Day Podcast, where we discuss driving incremental business growth and other topics related to real estate, property management, and entrepreneurship. Now to the show at hand.
Matt Zalk here. I'm the host of the Same Day Podcast, where I connect with top business and real estate leaders. Thanks for tuning into this special edition of the show, where we'll take a look back at some of our favorite conversations from previous episodes. It's brought to you by Keyrenter Property Management. At Keyrenter Property Management, we are a full-service property management company helping our clients buy, renovate, and operate real estate assets. We help our clients build wealth while taking the headache out of property management. No matter what rental you have, single-family homes, condos, townhomes, apartments, we have the management solutions you need. Go to keyrenterpmc.com or email us at info@keyrenterpmc.com. Now, let's hear some top conversations from past episodes.
I always feel like the first 4 or 5 are the most difficult, right? So as you get the traction, you get the reps, you start to understand it more. We started to build some equity. I was growing professionally, and then it was time to at that point really gravitate. In my view, I still love the single family model. I still do a few flips a year, but it was just an economies of scale thing. So I had kind of developed this philosophy on single family of, to some degree, a path of progress investor, right? So we discussed this a little bit, but I don't speculate on values, but I buy in areas that I don't want to be the pioneer. I don't want to be the first guy there. But as I start to see traction in certain revitalization and components to where I can justify a strong recaptured equity position at the time of when I'm finished, but I still anticipate some escalated appreciation because of the fundamentals of that area. That's what I started pursuing.
Something I talk a lot about, and I've done a few sales trainings, is I did not like cold calling in 1989 when I first got out of college. I do not like it today, but it's something you have to do. It's all about activity. You can be the greatest salesperson in the world, but if you don't have any activity, you will not succeed. So, and you can be the worst salesperson, but have enough activity that you'll still succeed. So it's a combination of both that and it's changed a lot, Matt. It's, with technology and LinkedIn and social media, that whole landscape has changed dramatically from when I first started, and you're picking up the phone or writing letters.
Right. Then I learned about construction loans. I learned about hard money, private money, partnerships, and different things like that, and started networking on a really normal basis. And so kind of getting back to your first point of finding deals, if you're the person finding deals, you usually can hopefully partner with people to either with the capital side or the experience side, because you have what they want. You have what most people want, which is a good solid deal or, whatever the case might be. And so as just that experience kind of got deeper and the knowledge and all the education kind of get further and further, plus then with, human resources, whether it be partners or other people, property managers, bankers, different things like that, that is kind of what shot me towards the, in the stratosphere.
One of the events that occurred after that recession, or in the back half of the recession, was that institutional equity, so large scale investors, started saying, hey, there is an investment opportunity to purchase single family homes with scale at a discount to what we believe their value is. And so you had groups like Invitation Homes that maybe they have $18 billion or so of single family homes on their balance sheet. So I think the build for rent movement was really something that came after this idea that, in real estate, there's, to my knowledge anyway, always sort of been darling asset classes. So at one point it might have been self-storage, or maybe it's medical office or manufactured mobile home housing. The build for rent single family space has been something that's been attractive before build for rent, even in just scattered site existing resale homes. So if you think about one of the things that institutional scale investors do, is they look for areas where there is not yet consolidation of ownership, and they go and they consolidate and they create value that way. And so those folks are creating value the same way.
Well, I would actually push back just a little bit, because I do think that we can show some really good ROI on that stuff. This isn't how everybody does it, but one thing that we do that we offer, we do quarterly team performance assessments with our clients, and so we baseline that at the beginning, so we know kind of where our starting point is. We're talking actual data-driven metrics on things like communication, relationships, alignment, execution, capacity, team culture, all that kind of stuff that maybe most businesses don't track or don't have the means to track. You can track your own turnover, right? You don't need me for that, but I can help track those other things. And so what I actually do with those clients is we'll take that assessment, and then wherever we're scoring low, those are the things we're going after month after month as I'm working with them. We're going, hey, we're going to improve team communication. 3 months later, we're going to take that assessment again, and we're going to see a huge increase in that, and we're going to shift our focus somewhere else. So it's data-driven, like strategic leadership and teamwork development stuff. It's not just shooting in the dark. We're actually aiming at something, and we intend to be able to show a strong ROI on those things.
Thanks for listening to the Same Day Podcast. Tune in to a new show each week and be sure to subscribe to get future episodes.